Coinbase has said that the crypto markets have displayed resilience in the face of recent upheaval in the US banking system, with Bitcoin in particular outperforming. And joining us to discuss this is Coinbase's institutional head of research, David Duong. Welcome, David. Thanks so much for coming back on the show.
No, thanks for inviting me.
Yeah, so I just want to get straight into it. Bitcoin's performance amid the US regulatory uncertainty. How do you see that? How do you think it's going to be this week? Given there are so many other macro, positions being taken, whether it's to do with oil or anything else. How does all of that affect Bitcoin? And are you bullish in Bitcoin? Are you bearish in Bitcoin? And if there's any other coin that you think is something we need to refer to also.
Yeah, there's a lot to that question that I would have to unpack. Like you've asked about the connection of Bitcoin to the regulatory environment, which I think is there, as well as what's going on the macro side. Let me kind of take the first part. And, I would agree that what we've been seeing is that because investors are more concerned about the potential, regulatory concerns surrounding non-Bitcoin cryptocurrencies, I think we've seen a lot of people rotating into Bitcoin as a result. In fact, we've seen a lot of the flows moving away from stablecoins and altcoins into Bitcoin, predominantly because I think that narrative has been more prominent recently, that people are concerned whether, it comes from the SEC or the New York Attorney General, that non-Bitcoin cryptocurrencies may be considered securities, for example. Of course, that's been counterbalanced by the CFTC, who's been much more adamant that this still remains a commodity. But I think that issue is still at hand. The other thing is, I do believe that what we've seen from OPEC overnight, for example, definitely increases the chances that inflation could actually somewhat spark higher, and therefore presents a macro opportunity for Bitcoin as well. And I think we've already seen to some extent that Bitcoin has been acting as an alternative to the traditional financial system, given what happened with SVB and the turmoil in the banking system. So I think it's on a lot of people's minds.
I have to ask though, because it does seem counterintuitive almost. Again, even though we are seeing, as you mentioned, OPEC, particularly Saudi Arabia, cutting its production, that of course is leading to higher oil prices. It's an input, and what ultimately ends up, we'll see it in the CPI later on, perhaps at the end in May when we look at the April numbers. But why would they go to Bitcoin instead of gold? Why would they go to Bitcoin instead of real estate? Which again has its own issues with rising interest rates, but nonetheless is also considered by many to be an inflation hedge. What would attract them to Bitcoin at a time when there is this regulatory uncertainty?
So one, the regulatory uncertainty, I think, doesn't apply as closely to Bitcoin as it does to many of the other non-Bitcoin cryptocurrencies. But I would say many of the alternatives you presented, for example, gold, real estate, they present viable alternatives. I don't think that that's saying that these things are mutually exclusive in any particular way. It's not that I'm going to invest in gold or real estate in lieu of Bitcoin. It's I'm investing perhaps in gold as an inflation hedge, or let's be honest here, more as a geopolitical risk kind of hedge, potentially a bank system hedge. But in addition to that, I might put some money into Bitcoin as well, because, I don't know what the circumstances are going to be surrounding that. And if you're looking for something that exists outside of that financial system, I think Bitcoin still presents a very strong, viable alternative.
All right. We've been looking at several reports that have come out, David, and one of the reports was actually a Citi report. And the Citi report talked a little bit about the promise of the potential of blockchain, but it also said that this promise of potential of blockchain would be driven by CBDCs, tokenized assets in gaming, and blockchain-based online payments. So it really didn't mention crypto assets. I just want to get a sense from you what you think about that.
I think that there has been a lot of attention paid to the value of CBDCs, which, to varying extents, some countries are further along than others, but in the United States, at the very least, we're still 3 to 5 years away from having a retail available CBDC. Of course, the Fed is trying to push the Fed now, which I believe is going to start in July, and some board members have alluded to the idea that FedNow could be a potential stand-in for a CBDC, for example. But I mean, these things have very, very different use cases than what we currently see in the crypto market economy today. You know, stablecoins, for example, really aren't subject to the same surveillance issues that CBDCs have. And CBDCs have other value propositions, right? CBDCs, for example, could be used if, say, there's a particular sector of the economy that you want to promote. So you decide that sector will receive some of this funding, but they have a shelf life, and the CBDC could be potentially be exploding money that actually expires at a certain point if that's not used for that specific purpose. So I'm not saying CBDCs don't have their own use case, but I do think that people kind of get ahead of themselves when they think that it's a full replacement for what's going on in the crypto economy today.
Yeah, but David, here the point is more about the fact that you have Citi's think tank basically saying that crypto assets may not play that important a role going forward into the promise of blockchain, but you'll see CBDCs doing that. So I just want to understand whether you think crypto assets won't play that role, and are they then saying that because, you know, the perception is that there's a coordinated attempt almost to, well, hurt crypto in a way?
So, I mean, a lot of that kind of gets down to what is the regulatory sentiment at the moment. And here too, you know, I believe that people are kind of focused on kind of the negatives of perhaps like the regulatory by enforcement actions being taken by the SEC, for example, which, you know, I don't think is fully kind of indicative of everything that's going on that side. I think we're kind of taking the hardest part of what's going on the regulatory landscape and kind of like saying that that is indicative of everything that's going on. And that's not true. You know, we're seeing a lot of progress happening in other places as well. So I think that coupled with the fact that we're seeing a lot of development outside the United States, as far as, you know, people progressing, trying to make regulatory hubs inside of the UAE or Hong Kong, for example. I think that those kind of efforts are going to see that, you know, the risk of regulatory arbitrage increases. So the United States is going to recognize that, unfortunately, there's going to be some moral hazard issues that they need to consider when they're talking about this. And I think that those considerations really haven't been processed as much as some of the negatives that have come out in recent weeks.
All right. So let's look ahead in the next 6 months or so. I mean, what do you see ultimately happening here? We have. You know, do you think that the Fed, well, there are actually parts of this, right? So first question is, do you think that the Fed will in fact continue its rate hikes over the next meeting or two? I mean, you know, we're almost at the terminal rate, at the expected terminal rate, if not a little bit higher now that everyone's just anticipating some sort of pivot by the end of the year. Do you think that there will be a pivot, number one? Number two, what does that have? What effect will it have on crypto between now, let's say in the next 9 months?
Yeah, I mean, I think that's one of the factors that really contributed to the move higher in Bitcoin as well. I mean, I would say that there were 4 factors. The 2 that I mentioned earlier, which was the alternative to the financial system, the, you know, regulatory concerns surrounding non-Bitcoin cryptocurrencies. It's definitely what's going on with the central bank. And partly, of course, people tend to view what the liquidity program kind of offered by the central bank, by the Fed, as a form of QE, which I don't think is quite accurate. But certainly, the idea that we're getting closer to the end of the tightening cycle is a big factor. And the last thing is just kind of technicals regarding like month end, which is now passed. But as far as the Fed question is concerned, I will say that I think that for sure, like what we've seen from Powell is that he admitted we really only have another 25, 50 bips as far as the additional hikes left in the cycle. Like the banking crisis has effectively wiped off 25, 50 bips from the terminal rate. So I think we're getting closer. The only concern I have is that we are also seeing negative consumer and business sentiment. And a lot of that has to do with the fact that the U.S. Treasury hasn't stepped in to actually back the rest of the deposits in the system. And for very good reason. I'm not saying that that's the wrong decision. because they have to also worry about what's going to happen if banks say, oh, we're rescued. Fine. That's great. Like we all our deposits are safe. Hey, maybe that means that we can be undercapitalized, or maybe that means we take higher risks to kind of meet some of the paper losses we have. I think that the Fed is very attuned, and the U.S. Treasury, is very attuned to some of those concerns, and therefore is inputting that. But the problem is you create centralization risks, right? Because many of the smaller banks, they have depositors who are more concerned about keeping their money in that system and are moving it to larger banks. Well, that means that those larger banks then have greater share of the deposits. If there's any potential risks in the future, and there probably will be, that creates additional shocks in the system. So we're not out of the woods on that yet. And we're also going to be running headfirst into the US debt ceiling, which really effectively kind of gets hit in early June, probably June 5th, June 6th, for example. So that for me still presents a risk in the short term, even though I'm more upbeat in the medium to long term.
All right. Thanks so much. That was Coinbase's institutional head of research, David. Thanks so much, David. Really appreciate you coming on once again.